Crypto people, how are you? And looking forward to meeting some of you at Acapulco in the sunny state of Mexico. Yes, we'll also, apart from talking from the main stage, we'll have a workshop there for which tickets will be made available as well. That'll be 2 hours in the workshop, so if you want to find out a little bit more about the Great Reset and our take and how cryptos and trading with a real method can set you up better, certainly that'll be a place to pop in and see. Anyway, let's talk about the crypto market cap, the total market cap. This is a log chart, so this has percentage in it, and this charts the great giddy heights up top here. Every market cap seems to get a different number. I think on some of them there were 800, this one's on 750. I think it depends which small ICOs, etc., were taken into account at, or just before, or just once in. So there might be a slightly different rule. So watch out for that. It's not the same necessarily as coin market caps number, etc. So always compare like for like. But anyway, the big point out of all of this was the big call of last year was the key call to get right, because this in percentage terms was one of the biggest moves. In fact, I'd argue since the collapse, this was the single largest move. You would have gone from, as probably indicated, at a high around about 216 there to 90s, 96. So it's roughly 60% haircut. Whilst we did lose huge amounts, there was a move there, then there was quite a sustained rally. That was in fact a structural pattern of its own. Then there was another down leg there that was almost as big, but had quite a snapback. This move was also fairly sizable, from in and around the 437s down to the 233s, but still not quite the same percentage. It also wasn't a single-minded and just go, go, go. That first 2/3 was just brutal. So it just highlights that you've got to be patient, and you've got to capture the big moves. The rest, you've got to play safe and just not give capital back. But let's just talk about where we are now. So that was just a macro flyby. I'm going to take you into the technical detail. Our overriding opinion, and this is what we've been trading in our premium area, is that we're going to go a little lower, and we're going in staircase manner. This is your final low so far since the bull market highs. Snapback rally over here, a falling wedge structure on your total market cap, which points to, at some potential point, the reasonable probability that in fact you will get a bump to the upside. But in the meantime, it's setting up consistent little fractal patterns that have been very, very similar in staircasing down. And this has continued for quite a while, and it's been quite consistent actually. Normally by the time you've noticed a certain set of patterns that are applying and working, they usually stop working at that point. You've had enough in data or information to recognize them. This one's been slightly different, and it's continued to keep on keeping on in terms of setting up almost identical structure. We've spoken a lot about this in our premium area and what that structure is. That's not the purpose behind this video. I will say that the squeezing wedge eventually dictates that an impulsive move is likely to come. Impulsive means quite volatile and explosive. And generally, traditional technical analysis suggests that it'll be to the upside. But that may be after final sell-offs and even pops through the bottom of the wedge before that occurs. You've also got to bear in mind that the lows down here, a large part of this has been taken back. And so this is happening in a large part. That is the complete low. We have come a long way back, but we've taken a long time to get there. We've taken a long time to get there. So what does it mean? It means that probably the selling momentum is not as strong as this snapback rally was. The selling momentum is in stages, and there's buyback. So there's tactical buying along the lows that is occurring, and as a result, there are still bears out there, but the fractals are getting smaller and smaller and smaller that's formed. I've drawn an inverted structure that suggests there may be a little bit more. We were short into this. We actually had what we call a fractal within a fractal on a shorter time frame. That broke and triggered. We took the break of the grind line here, which I'll select and fatten up a bit so that you can see it. There she was, and you could have got in early, and you are now in a way where you might have a target down here that could still be made. You might be saying, well, that's outside the lows of the wedge. Yes, depending where and how you are drawing the wedge, this line can move around some fair degree. So you can have a look at that. For example, I could have also drawn it like that. And that could give a little bit more wiggle room for this target to be made without having to be as far out. Often in wedges, you pop out the bottom before you break to the upside. There is a third option that can occur, so I've covered this with my premium guys, and we've spoken about it before the short, so we have taken shorts, but it's getting close to the end, so you have to be judicious. I actually closed some of them here. I'm not assuming that target will be made down at around about the 102 mark, which is an interesting level. So we want to highlight to you a couple of things. The fact that it's retreating in a staircase fashion with fair amounts of pushback shouldn't be lost on you. So that amount of time, and we've attained that amount of downside. So that's your rate of descent essentially from the high point to where we are now. Whilst if I change color and show you how pacey the snapback rally was, you'll see how quick that was. You've got to remember this snapback rally, however, much less time and a higher price gained. So time for price, and here you have in red a much longer time, but not as taken as back. But we are still in the bleed out, and if this goes down, it does have a downside target. So what this points is a higher momentum. But you've got to remember this was the 6,500 fall. So we'd been 100% down with very little pushback apart from near the end, a couple of attempts here, all the way down to the 3-2, 3-1s, 3-2s. So that was, as I say, a 60% plus in largely a single-minded move. It was a very pleasant trade to be in on the short side, not pleasant for those that were holding long, and sorry for you for that. But there will come a time when the longs will be back in favor. And so what else can I tell you? Well, with that market cap, it seems like the charts disappeared for a while. That's interesting. I'll go across to BTC USD while we do that. So that was the break on the BTC USD. So we would trade the hold of a BTC USD short until such time as the market cap makes its target. Market cap has gone away as a chart for me, which is always fascinating when TradingView wants to go on strike. The other thing that we've been watching is also crypto against the other currencies as well, because there's been a bit of dollar weakening effect as a result of their fake out attempt and bluff and bluster about actually raising rates and being the one economy that was diverging from the rest of the globe, only to do a full volte-face about turn after the SPY index dropped the better part of 20% plus in a matter of a month and a half. So they've suddenly refound their religion and are as dovish and peaceful again. So dollar has had a bit of a bumpy ride. So it's important also sometimes to look at the cryptos and the other. Unfortunately, it's not as liquid against the euro and the GBP, but the chart is still significant. And again, the structure isn't any different. Falling wedge, dip down, probably a chance to visit the low end of the wedge again, maybe dip through, and then eventually the potential for the upside break against the converts. Now, broadly, whilst I would say the upside break, remember a couple of things can happen. There's three scenarios, and I discussed this with wedges. They are not directionally always that reliable. There is a general view that the first two options that I'll describe are likely to happen. So there's a little bit of continuation, I suspect, going on here. We'll dip into that just now, but that we go down like that, bit of rounding, and then you get a nice impulsive break, little bit of a return move, and then further upside. And I've spoken of anything from the 3 8s, 3 9s up to the 4 1s as a zone for dollars terms. We're on the euro at the moment, so bear that in mind. But around about these kind of levels in the dollar time frame for another high point, that could be the move. So you could go lower first, then break the wedge, and then a little bit of a return move and go. That would probably be one of my highest probability scenarios, as I've spoken about. But you know, there's a number of ways that this can happen. We could, in fact, go, wedges haven't been 100% reliable, and nothing is 100% reliable, but wedges in crypto have actually been slightly less prone to do what you expect them to do. There is an impulsive move, but sometimes that impulsive move can actually be further bleed out to the downside. So they could do the blue option, a little bit of a respect of the squeeze that they've got, a down move, and then a fizzle, and makes new lows. I wouldn't say that's the highest probability scenario, but that does happen in crypto. We a couple of times we got tempted by falling wedges on BCH, took a pump up, only for it to roll over and make new lows out of it. That was also admittedly near the once the bear side of things were starting to develop. So we quickly learned our lesson there. The third option is, let's go a different color for that as well. So we're producing a third option. Scenario B is that you don't go too far low. You maybe do a small amount, you base out, and you go straight into the works. We could get another one of these kind of fractals. They are getting smaller with grind lines compared to them, and this was a very steep one, so they've been falling over with their grind lines, flatter and flatter. We could get another one set. You could come to the bottom on the red, and then you could get such as that again, and then you once again dip down and then base out, and we could be getting more and more deeper into the squeeze. So that is kind of a fourth road. If you look at the fourth option, that could be in existence. Essentially, though, the express take for me is, given the violence of the snapback, I say it was a reasonable strength snapback that took place after the low. Whoop, we didn't change the color. Let's clear that one. We don't want it. Given the violence of that snapback, we've been quite slow on the down leg. So the momentum swings are big on the up and moderated staircasing on the down, although pretty persistent. There's keep leaning. There's a perpetual lean from the top that's coming in on the top here. You know, there's a real lean. But that said, the bidders haven't entirely run. They've shown up at the lows, which shows tactical buying. That's generally smarter money than FOMO buying. You know, those are people that are prepared probably to accumulate. So that's interesting, and that's why I think that there could be a snap out. I would favor the orange or the red scenario, or the fourth fractal scenario before the blue. And that just means getting your point right. So this isn't a time for aggressive shorts this close to the low, where there may well be quite strong support. So what am I talking about when I say the low? I'm talking about the low of the 6,500. You might be able to squeeze another one of these, as I've said, the fourth In fact, it wouldn't be the fourth, probably be the fourth option, but probably the fifth fractal here, and in before testing the low of the previous low, but not much more. So at some point I anticipate that there will be an upside move. So I am only short-term bearish, and medium-term expecting some form of basing out for a probability rally of reasonable impulsiveness. Although I wouldn't expect it to have the momentum of that. It could be slightly more moderated, but we'll see. And overall, these structures could be setting up something very interesting and new for us that could either be continuation downside or first set up in a new trend, etc., which could lead to other sides. So we're going to wait for the market to show us its level of strength and how to play it. So that was that. Quick fly past Ethereum. People always ask me sometimes in the comments, what about XYZ wave or some small ICOs, new coins or low market cap coins? I don't drop into that, because if you don't know where your primary markets are moving, it's foolhardy to be bearish Ethereum and Bitcoin, but expecting some small medium cap to absolutely moon. There are examples where it's happened, but it's not the probability play. Stay the hell out of it. If the God market is contracting, if the market cap is contracting, do not be the guy that has to be going long a bunch of small alts. It's not the time for looking to buy small alts. That doesn't mean there haven't been some that haven't moved up. You've seen Tron go up, you've seen DLT push up a little bit for a while, but eventually the big market cap overall flow of the tide weighs heavy, and gravity eventually pulls. So this was the snapback rally for Ethereum. There is a slight possibility, and I say a slight possibility, this is not necessarily what I would call my biggest probability scenario for it. Let's take that Ethereum actually. This is the one on the bigger time frame that, you know, that was the low since the bull highs, with a kind of double bottom, really impulsive there. That was kind of a neckline for an inverted head and shoulder. Yes, it is, even though it's not very traditional. Some of you might say double bottom. You could be right on that too. On the others, it was a full left shoulder, and this was the lowest point head, and that was a nice little continuation pattern. So that's an interesting level, and you're not too far off it at the moment. There's also a bit of a non-standard head and shoulders in play for Ethereum that's been a little bit weird. So I don't have huge amounts of confidence in it, but it is out there, and it has got a target that is targeting below the previous lows at 68. So if Bitcoin does have a bad hair day, and it properly starts wetting the bed again, you could find yourself with Ethereum and others being dragged down and performing to these kind of targets, which is 68.25. This is not what I'd call a high probability play, but you had a kind of neckline there. There was real squeeze on the neckline that shows the key levels significance. You got a proper breakdown and a target make there. Since then, you've been in the grind. As I say, on the market cap, we call that inverted. That's slightly higher than that there, but it was absolutely squeezing and gave a beautiful little fractal on a low time frame along that grind line, and in the end, it rolled to the downside. So again, this is not strength here. You can see that right there. Whoops, I didn't have the pen on. Let's put the pen on. You can see these when you get on a lean on the grind line. You can see this kind of structure often happening just before a proper spill. Guess what? You get really tight risk and really early entries and nice juicy big rewards, and I do think that there's scope for this also to have continuation, which brings me to, I think it was this chart for which one of them had done a it's clear and close, a low time frame continuation pattern for. Let's see it if it was you. No. The same was seen with EOS, by the way, and we were watching them. I thought I could antagonize my EOS friends again with a bear call of some percentage loss, but I decided to leave the poor guys alone. It's really not personal. But let's have a peep. There we go. It's on the Bitcoin. Bitcoin on the euro. A sell down, particularly on the euro. It's very bear flag like, and these wicks every time you get to the top end of the flag that are being sold off are not strong. So this is pointing to a revisit, possibly to the lower end of the wedge, even a spill out with that move. So it's not going to be rosy short term for crypto. I'm expecting more downside, but then on the more medium time frame, in time, we will see evidence possibly for a slightly higher probability of an upside break back to the 4,000 levels. So that's how we're trading it. Got to be conservative with our shorts because it could suddenly swing, and that's the game for us. Okay, that's my update for you on the crypto markets and how it's all rolling. One of these scenarios at some eventual point, another fractal with another dip lower before eventually getting that leg up before running this low. The orange line, the red line, and the fourth way with the lower fractal again, which could give it the break, and then another downside break, but of very small levels, smaller, before eventually doing the upside rally. The fifth way, if you want to call it, the blue line, is the one of concern, and it does happen slightly more often in cryptos than it does in traditional markets, but overall it's not the highly likely. The other three ganged up together are probably suggesting, and I didn't do it on BTC USD, but it's probably suggesting, as I've said before, the 3.8 to the 4,200 type range could be possible on a snapback rally, depending on the momentum of it. So if I just quickly draw that in on the BTC USD, because most of you only recognize that, and that's okay, I understand, same for me. Something down could go up, could get an additional fractal, but then by the time we run, I would see somewhere along the lines of high range round here, which